Welcome to today's market analysis, August 2nd, 2025, where we're diving deep into the basic materials sector. Buckle up, investors, because we've got some intriguing movements to unpack. From soaring commodity prices to shifting global demand, this sector is giving us a masterclass in economic indicators. Let's break down the candlestick patterns and market cap changes that are shaping the landscape of raw materials and industrial resources. The basic materials sector, a cornerstone of the global economy, has been on a roller coaster ride this week. As of market close, we've seen a significant uptick in performance, with the sector posting a robust gain of 4.2%, translating to a market capitalization change of $31.5 billion. This impressive movement has been driven by a confluence of macroeconomic factors that savvy investors need to keep a close eye on. Let's start with the GDP growth rate, a critical indicator for the basic materials sector. The latest figures show a moderate expansion of 2.8% annually, falling squarely within the optimal range of 2 to 4% that typically signals robust industrial activity. This level of growth is music to the ears of materials producers, as it indicates increased investment and consumption, particularly in construction and manufacturing, key drivers of demand for metals, chemicals, and construction materials. Turning our attention to commodity prices, we're seeing some fascinating developments. The Bloomberg Commodity Index has surged by 3.5% this week, with notable gains in copper, aluminum, and lumber prices. This upward trend reflects strong economic activity and is providing materials companies with much-needed pricing power. However, it's a delicate balance. While higher prices boost revenues, they can also squeeze margins if input costs rise too rapidly. Interest rates and monetary policy continue to play a crucial role in shaping the sector's performance. The Federal Reserve's recent decision to hold rates steady, coupled with hints of potential rate cuts later in the year, has created a favorable environment for basic materials companies. Lower borrowing costs are likely to stimulate investment in capital-intensive projects, potentially fueling demand for raw materials across the board. The Industrial Production Index, a key barometer of manufacturing, mining, and utility output, has shown encouraging signs. With a month-over-month increase of 0.3%, we're seeing sustained improvement that correlates positively with material consumption. This upward trend suggests that the sector's recent gains may have legs, potentially setting the stage for further expansion in the coming months. Inflation remains a double-edged sword for basic materials. The latest Consumer Price Index (CPI) figures show inflation holding steady at 2.4%. A level that allows companies to pass on moderate cost increases without significantly eroding demand. However, producers are keeping a watchful eye on input costs, particularly energy and labor, to ensure they maintain healthy profit margins. Currency dynamics are adding another layer of complexity to the sector's performance. The US dollar index has weakened by 1.2% over the past week, a move that's generally beneficial for American materials exporters. This softening of the greenback is making US products more competitively priced abroad, potentially boosting demand and supporting the sector's recent gains. Now, let's zoom in on the technical analysis that's giving us valuable insights into the sector's trajectory. Today's candlestick pattern for the basic materials ETF XLB is showing a bullish engulfing pattern, formed between 10:30 a.m. and 2 p.m. Eastern Time. This powerful reversal signal suggests that buyers have overwhelmed sellers, potentially marking the end of a short-term downtrend and the beginning of a new upward move. The daily chart reveals that the sector found strong support at the 50-day moving average, with prices bouncing decisively off this level during the morning session. Volume spiked significantly during this rebound, lending credence to the bullish sentiment. As we approach the closing bell, we're seeing the formation of a large green candle with a long lower wick, indicating that bulls successfully defended against early selling pressure and drove prices higher throughout the day. Zooming out to the weekly timeframe, we can observe that the basic materials sector has been forming a series of higher lows and higher highs since the beginning of the quarter. This classic uptrend pattern, coupled with today's bullish engulfing candle, suggests that the positive momentum may continue in the near term, with the potential for new highs on the horizon. It's worth noting that the Relative Strength Index, RSI, is currently hovering around 65, indicating strong momentum without yet reaching overbought territory. This leaves room for further upside before we might expect to see any significant pullback or consolidation. Looking at specific industries within the basic materials sector, we're seeing standout performances in several key areas. The specialty chemicals subsector has led the charge with an impressive 5.7% gain, boosting its market cap by $12.3 billion. Innovation in industrial and consumer products continues to drive demand in this space, with companies like Sherwin-Williams and PPG Industries posting strong results. The metals and mining industry isn't far behind, with copper and gold miners showing particular strength. This subsector has climbed 4.9%, adding $9.8 billion to its market capitalization. The surge in commodity prices, coupled with ongoing supply constraints, has created a favorable environment for producers like Freeport-McMoRan and Newmont Corporation. Building materials companies are also riding the wave of positive sentiment, buoyed by strong construction activity and infrastructure spending. This group has seen a 4.3% increase, translating to a $6.7 billion rise in market cap. Industry leaders like Vulcan Materials and Martin Marietta Materials are benefiting from robust demand and pricing power in key markets. The precious metals subsector has shown resilience in the face of shifting interest rate expectations, with a 3.8% gain and a $4.2 billion increase in market value. Gold's appeal as a safe haven asset remains strong, supporting companies like Barrick Gold and Newmont in their upward trajectory. Rounding out our analysis, the industrial gases industry has demonstrated its defensive characteristics, posting a solid 3.5% gain and adding $5.1 billion to its market cap. The consistent profitability of companies like Air Products and Chemicals and Lind plc continues to attract investor interest, even in a volatile market environment. As we wrap up today's analysis, it's clear that the basic materials sector is showing significant strength, underpinned by favorable macroeconomic conditions and positive technical indicators. The combination of moderate GDP growth, stable commodity prices, accommodative monetary policy, and a weakening dollar is creating a potent mix for sector outperformance. However, investors should remain vigilant. The cyclical nature of basic materials means that the sector's fortunes can turn quickly in response to shifts in global economic conditions. Keep a close eye on upcoming economic data releases, particularly those related to industrial production and inflation, as these could provide early signals of any changes in the sector's trajectory. In conclusion, the basic materials sector's recent performance offers compelling evidence of its resilience and growth potential in the current economic landscape. With strong technical signals and supportive fundamentals, the sector appears well positioned for continued success in the near term. As always, Stay tuned for our ongoing analysis and expert insights into this dynamic and essential corner of the market. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is, and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.